Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday evening, the 20th of October, 2020. And we're just now 6 o'clock p.m. Central Time. You've just picked up, you were making the lows of the day in a number of these indices, I swear to you, 10 minutes ago, and the market just took off to the upside. If you look at my metals update, go look at the quotes you saw on your screen. Here's what we're into, and here's what I can't help you with. Where are we on a COVID relief deal? I have no way to know if we're making progress, not making progress. There'll be leaks from one side of a camp, then the other side, and this market wants that. If it gets it, how I look at the market, it's bullish, the stock market. It's bullish inflationary markets like the gold market, the silver, the copper market. Don't get it, it's bearish the stock market, bearish at first the gold market. It would be probably a bit bullish in the dollar index and bearish in the foreign currencies. But we're at the mercy of politicians, not what makes sense, and you don't have a week that is heavy on economic data. So it creates even more of a problem. When we look at the energy, if you take a look at the API numbers, they were bullish. And they're looking for friendly numbers on the EIA tomorrow. But this is not about that. This is about COVID relief. Do we get it? We could wake up and hear that they made a deal tonight and that the language is all that they're working on and they're going ahead with it, or be presented to the Senate. The Senate could drop their $500 billion vote and all of a sudden just say we're waiting on the wording for this. I don't know. Then you have Thursday night. Why do you think the president wants this all done now? You got the debate Thursday night. He probably wants to go in and say, I did it for the American people. You play that. It's very difficult to do it. When we look at the S&P, we've had trouble getting back over on a closing basis the high we made back in September. So we've gone about a month or so now. Haven't done anything since then. That high, I'm just curious, when was that high made? On a closing basis. That was August 27th, so my eyes were off by 1 week on this. But that was the last time that we got up here. The market's goal is, if they get a deal of any type, probably to go right for that number. You're not near it. You're at 34.46, so you'd have to be up 60 handles, as it's called, in order to do that. I don't know if it's capable of doing it. What the market is pulled back to on a daily chart is the inverted head and shoulder, the neckline. And that's where this battle seems to be forming right now. Now, it will take a lot to destroy this pattern, even if you fall back in it. Obviously, getting under 3,300, that would do the job for me. I'd say throw that away. It's not going to be the pattern that I thought it might be. But right now, I'm not saying that. We are looking at a pattern on the chart that has a bearish pattern on the daily chart in terms of the swing line. We have lower highs, lower lows, downtrend. Where's the market? It's over the 18-day average. Bias is up. The two fight each other and you have nothing. When you then take a look at Bollinger Bands, they're racing towards the market for resistance and support zones. Not there just yet, and momentum is pointing down. So if the market were to close under 34.19, let's call it 19, that would be a bearish action. You'd have swing line down, bias down, and you already have momentum down. That's what the bulls don't want to see. So we got to wait and see how this market's going to react. In the NASDAQ, by the way, I want to go back to this other chart. We are very close to having hit the 18-day average. When you lose the embedded reading, that's often what the market races to. Is it close enough? Well, I'll leave that up to you. I know what I told my subscribers already, and I know what I said on the Spider ETF people, so they've got what I'm saying. I'm not going to tell you all that. In the NASDAQ, and not that I don't like you, by the way, I do. And by the way, we went over yesterday 10,000 subscribers on this YouTube channel, so thank you all. Tell your friends about it. I think you'll like it. And by the way, I'm going to be, if you watch me out of Australia, this coming Thursday at 4:30 p.m. Central Time in the States, I will be on Sky Business there. I love doing the show, so Hope to see you all there. If you have questions, maybe you write them into them. But on the NASDAQ, again, challenging the 18-day average. And you did a pretty good job of it today. You missed the 18 by 3 ticks. Come on, you've come down when you lost the embedded reading the whole way there. I consider that pretty much money in the bank already. Same in the Dow. What are you looking for? The last hairy hair? You got to 28,048. That number's 28,024, and you've just come down. Now, could you hit them? Of course. Do I expect them to be hit? I do, but you're close enough. And do you need the last penny out of the market? In the Russell, I am bothered by it. Here's what the Russell did. It lost today the embedded reading. You see this, 79.43. Now, when you lose it by a half a point or whatever, it's hard to figure out what to do with it. I wait until I see how the market is doing in the early evening trade, and it's regained it. This is going to be a son of a gun. If the market drops from here, I'm looking for the 1590 level, the 18-day average of closes. If a relief deal is done tonight and the market smells that that's occurring, we should clear this 1648 level and possibly make a run at the 1690. I hate being at the mercy of politicians. In the VIX, you've gone from the lower Bollinger Band to the upper. In the process, what do? You're overbought at a key resistance point. Don't do a deal, you probably take the VIX even higher. Do a deal, my guess is the market heads back to the 18-day average. Everything's predicated on that. I hate this. In the bonds, you're watching the widening of the curve yield. When that occurs, the market is saying it expects that things are going to get better down the road here for the longer term interest rates. They're going higher. Now, is that because we're going to get a COVID vaccine? Is it because we're going to get a relief deal right now? Is it because Mr. Trump's going to lose the presidency or retain it? Which one? I don't know, but I can read a chart, and that's what the chart is doing. I would estimate that anything in this 172.25 area is really pushing the limit on it. As you're oversold and you've come straight down here, if you think about it, from 177, that'd be 5 full points. That's a heck of a break. In the 10-year note, you broke enough to now have a pattern of a higher high, lower low, oversold. No trend. You have a bearish crossover. Now, look at the red line to the green. That's the 18-day average in red to the 100. This is where you were today, and this is where you're at on the close. Well, not the close, right now. You've got a bearish crossover. That's going to be a lot of resistance in this marketplace. In the dollar index, the dollar got under 9,300 and didn't catch a lot of stops. That's a little bit bothersome. So I'd be careful. I want to see how it reopens tonight, but you have lower highs, lower lows. Target 92.87, oversold market. Could be a problem here. If there's a relief bill, I think the dollar goes even lower. No relief bill, this is the area where I think you're going to get your bounce. Eurocurrency. Let's flip what I just said, because that's where you're at. You hit the upper Bollinger Band, it's like you hit a brick wall in that market now. You're not in a trend, you have a lower low and a higher high, and you're overbought. All COVID-19. Now, we also don't know what's going on between Brussels, which we call the European Union, and that's where they're based, and the UK. Everybody's playing hardball there. I still think there'll be a last-minute deal. That's just how things typically go in Europe. We'll see if I'm right or wrong. In the Japanese yen, you've retreated back to the 18-day average for 2.5 days now, and that's where you're just sitting. This market's doing just what I'm talking about. It is saying, I'll position myself now at a neutral number. What are they going to do with COVID? The relief bill. That's what I think they're looking at. When we take a look at Bitcoin, still in the bull camp. Look at how it's riding that upper Bollinger Band. When you ride the band and you stay like this, you broke away just one day out of all these days where you hit it. That often causes the slow stochastics to embed. It's like they're being pulled along. All it takes, and let's go to the close on Tuesday, not here. Both numbers over 80, not over 80 on Monday. See that? So now it's being dragged. Is it going to be able to be pulled fully along? I can't answer that yet, but I know what it's trying to do. Look at this differential between Brent and WTI. You're back to $1.52, not the $5 numbers back here. So this market is saying, as I pointed out yesterday, there's just a lot of oil everywhere. And by the way, are you looking at all the takeovers and mergers that are going on in the oil patch in America? We talked about this when oil went to that negative $16 a barrel, that was going to break people, and you would see the big strong boys taking over the weaker boys, and they'll cherry pick the properties that they want. It's exactly what's going on. At events like this, the strong get stronger, the weak disappear. That's typically what goes on. When you're looking at this market, you can see you've had the trend down in terms of the swing line, but you're unable to close under the 18-day average. And at the same time, you have an embedded reading. You need the market to get over 43.22, and that could turn the market where it makes a run, possibly at that upper Bollinger Band. It's got to clear that 100-day average, and that's been a son of a gun. Are you looking at it, that green line? That is your big resistance. What about I said Brent there, right? WTI is over that number. It's got an uptrend. The key in this market is not to take out today's low. If we take a look at this low, this was 40.34. Then we have an outside day up today at 40.46. So I think the pros are long this market now. Are they embedded? Well, let's get rid of this number and see. Both numbers over 80, both over 80 on Monday, and both over on Friday. That's why I think that they're there. And I think the number they don't want to see the market under is 40.46. Barring that, seems to me that if the market gets a pop here with something good out of a COVID relief bill, the 42.60 level could come fully into play. Heating oil, just hanging at the 18-day average with no trend at all. It's also jet fuel. It's both things. Now, why is this hanging in there? If we think about it, we got winter. And if there is a relief bill that gets passed, what are we talking, 25 billion for the airlines? So another thing that we're looking at. Plus, we're getting more people flying. If you watched in the United States, we had 1 million people hit the airs. I think it was yesterday or the day before that flew. These are numbers we haven't seen in a long time. So people are getting a little more comfortable, even with this monster spread that's happening again. In the nat gas, you've had all these waves to the upside. You are overbought. Be careful. This market could be setting itself up for a pullback right now. When you get this and you don't really go up and make new highs, it's often a sign that you're using a lot of the ammunition in your gun. We talk about this and a lot more in our newsletters. So if you haven't seen what we do, we are a group of gray-haired guys that have been around this decades. I've got 5 decades. Some of the guys here have more time than I do. And we have been through the bull markets, the bear markets. Now, my compadres, as I call it at Linn, they're writing these newsletters, and they've taught the younger staff as well how to write them. So we've got young staff that we have taken by their sides, and they are writing these newsletters, giving you ideas about price counts, if you know what those are, their objectives where a market might go off of certain chart patterns. They're going to give you ideas on option trading. We've got option pros. They'll be talking to you long, short strategies in the market, what the spreads are doing in the futures market, and of course the markets and the fundamentals of the markets. We really write a lot about that. So if you'd like to get this and you haven't tried it, why not take a look at it? It's free for you to take a look at. You see what our customers get. Customers being people that trade through us. How do you get this? Call us at 866-973-2077. You can go to our website. We'll be happy to put it in your hands. You'll see free offers. Just sign up. It'll start coming to you. I'm Ira Epstein. You have a great day. I'll talk to you tomorrow.